Hello everyone. Today we're going to talk about Bitcoin, which is trading at 112,961. And not so long ago it was at 117,000. And while this drop seems noticeable, it's insignificant compared to what happened with altcoins. Many of them fell by 15, 20, even 30% in just one day yesterday. And this alt season, which we were waiting for with open arms, sneaked up on us from behind and did some nasty things to many, if you know what I mean. Before we start analyzing the situation on the market chart, I want to share some of my observations, years in the making, really, about situations like this. When such massive crashes happen on the market, and yesterday that's exactly what happened with altcoins, liquidity leaves the market. In other words, that huge number of long positions that existed has either been liquidated or closed by stop losses. And let's say there's no more fuel left for the move further down because that fuel was provided by buyers, by those going long, right? Their closed long positions caused, how are they closed? By selling. Any long position is closed by selling, and that pushed the price down. Accordingly, such big drops usually are followed either by a sideways movement where new buyers accumulate. Well, if it's assumed that the trend will continue downward, right, then you need to gather some fuel so there's something to drive the price further down. Because someone will decide that this is the bottom, start buying up that bottom, and then they'll be given a new one as a gift. Or we get a compensatory rise, a kind of rebound, because if something has fallen very sharply, then it can bounce back in the opposite direction. And it seems to me that most likely, this is before analyzing the chart, that most likely we'll see some local growth and then a continuation downward. Now let's switch to the chart and take a step-by-step look at why, after all, it's more likely to go down than up. So we had this boy here, right, with big eyes. He was looking somewhere down with his left eye. Let's draw another boy. So the boy's eyes were located right here. Maybe they're a little different, right? Here is his head. Here is his nose. Here is his mouth. Here is one ear. And here is the other ear. A second ear. And what do we have there? We had some hair. 1, 2, 3. Let's say he has 3 hairs. And this boy is also looking somewhere down. Where is his gaze directed? Maybe, just like the previous boy, he was looking, look here, at the 300-day moving average. Well, I think the boy is looking somewhere in this area. Now take a close look at his eyes. Well, it looks like he's looking right here. And this is the area of $103,000. Both the 200-day and 300-day moving averages pass through here. Now let's take a look at the levels from a closer distance and pay attention to the following point. In the previous video, I told you that Bitcoin first broke through, yes, the important level of this green candle at 116,935. Here we had a daily close above that level. And then I said that we have the right to consider a long position only under one condition: that we see another daily candle close above 116,935. At the same time, I emphasized that this close might not be near that level, but significantly higher, and there might not be a proper entry point anymore. So you could try to look for it on the 4-hour candles, on the daily, or on the hourly candles, and so on. But as you can see, that didn't happen at all. And after that, we got a bearish engulfing pattern. The market continued to move down, breaking through the 5-day and 100-day moving averages. So what possible scenario do we have now? To put it simply, our scenario is downward. Why? Well, for the simple reason that, let's grab the drawing tool and look, right here. But let's do it in yellow so we don't get it mixed up with the boy. So at this point, we have a break through the 100-day moving average. Then right here, there's another break through the 100-day moving average. Here there's a retest, we stay below it, move above, and then we have a third break through the 100-day moving average. What does this third break mean? It means that most likely the downward movement will, continue. Bitcoin tends to break through the moving average and therefore is looking somewhere around here because we've already moved to the middle between the red 100-day and the orange 200-day averages. Accordingly, our priority is in the area of about $104,000 or $102,000, somewhere around here, where the boy is looking. But what could we get? The market again does not always act so straightforwardly. We could get another attempt to move, first of all, to the 5-day average, and secondly, even above the 5-day average. It's unlikely that this would come with engulfing this huge red candle. If we see that this red candle, let's mark its level, just turn on the magnet, gets engulfed. For that to happen, we need to close the daily candle above 115,232. Only then, and only then, do we have the right to say that the market has turned upward. Right now, the market is definitely looking downward, and frankly, I don't see any other alternatives. I see a scenario where we might come, for example, over here to the 5-day moving average, right? We might hang around here for a while, but with high probability our path is headed somewhere over here. At the moment, I don't see any other options. Now let's remove all the markings. We'll try to update them each time so as not to get attached to any dogmatic views or judgments. And let's see what we have on the monthly candles. Take a look. The monthly candles have tested the base of the August candle, meaning its opening point and, well, yes, the candle is green, but that's about it. At the same time, it updated the minimum but did not update the August high. Now let's take a look. So, the key point here is that, first of all, we have a double divergence. Let me zoom in so it's easier to see, okay? Let's also do some more drawing. Look, here are the first highs, here are the second highs, let's connect them. Here is the corresponding RSI high, and here is another one. This is a double divergence on the monthly scale. Nothing good about it. In other words, it points toward a decline. And the way a divergence on the RSI is worked out is by moving into the area of 50. That's the RSI value, not the Bitcoin price. Now let's look at the weekly candles. What do we have on the weekly candles? On the weekly candles, well, strictly speaking, there weren't any divergences, but there was one candle that set a new all-time high and closed red, and then a second candle, right? And so we had an attempt at a reversal. Formally, it succeeded. Why? Because these two green candles closed above this red one, right? And in fact, on the weekly candles, from the perspective of candlestick patterns, we have a long, strange as it may seem, but at the same time note that on the weekly candles, or rather Bitcoin on the weekly candles, has approached the 50-week moving average once, twice, and the third time it might not just approach it, but actually break through it and head toward the 100-week moving average. And the 100-week moving average, is $78,000. The 50-week moving average right now is $99,000. So a lot is converging around the $100,000 area for Bitcoin, where most likely a decision will be made. But I emphasize from the perspective of the weekly candles, we have a long here. This long position will no longer be a long after we see a weekly close below the level of $111,137. If we see that happen, it's game over. Pack it up, I don't even know what to say. Do whatever you want, but get out of longs, because there's a very high probability we'll see a drop to around 100,000, and potentially even $78,000. That's the story. On that note, I suggest we wrap up. Leave your comments, like or dislike, subscribe to the channel, and next time we'll take a look at some stock market instrument, for example shares of Tesla, Nvidia, or maybe Amazon. Write in the comments what you'd like to see and I'll review that instrument. Goodbye.